Hello everyone and happy Friday. Before we share my analysis from these last few days, please remember that neither I nor the SIMETRI team from Crypto Briefing are licensed financial advisors. What we provide is not a personalized investment advice. It is merely our opinions based on our various research and diligence. As always, do your own research before making any decisions about buying or selling crypto. Okay, so let's get straight to the Bitcoin technicals, and with that, let's get to the chart. So much like the crypto total market cap chart, we are kind of stuck in this consolidation phase here. We're just waiting to see whether this head and shoulders pattern is going to play out or whether it's going to be invalidated. Big picture again is a larger head and shoulders, and it hasn't met its full downside target. And the parabolic SAR indicator on a weekly basis is still giving a strong sell signal while we trade below 25,000. So that's the backdrop of where we are long term. And again, in the shorter term, we've got this range here that Bitcoin's been trapped in since probably around about a month or so, maybe a little bit less than that. But we can see this clear price range. Can't get above it, can't get below it, and every time that we go to test it, we get rejected. So 20,400 is the area that I'm watching. If we start to break above there, I think we could easily make a run towards this number, 21,700. So that's what I'm watching. And conversely, if we break down, then we're probably going to head down towards maybe 16,000, something like that. So keep your eye on this range, and that's really the most important thing that we need to watch in the short term as well. I will say, if the market did start to come off today and the dollar did start to find some strength, the first area that I would watch for a pullback would be 19,300 to 19,400. This is a sort of area that maybe bulls would step back in. Could be some type of bear trap if we pull back to that area, and I wouldn't be surprised to see the market leap up from there, especially if the dollar found some strength. So watch out for that and a potential emerging head and shoulders pattern here. And very much nothing has changed until we trade above the number 20,400 for me. Something that I'm going to throw out there, and something that's probably a little bit scary, is that this rally can actually extend if we look at Fibonacci analysis alone. So I've been saying over the last few weeks that these shoulders still, we've got 4 shoulders here, and over here we've probably arguably we've only got maybe 2. So maybe this can play out for a while. So I've got this Fibonacci extension target here, and the Fibonacci extension targets here is saying that basically if we get a weak rally, we can move towards my target of 21,700. If we get a strong rally, then there's a potential for even 23 or 23,500 if we were to get a big powerful rally and maybe a final right hand shoulder before we roll over. But this is definitely the scenario that I've been watching for a bounce, but it just remains to be seen how strong it is. And if we get the very bullish scenario where we break above 25,000, then this Fibonacci sequence is indicating a number of 28,600, which I think is probably not realistic at the moment, but that would be like the extreme target. But at the moment, I think we'll look towards 21,700 as a soft target. And this Fibonacci analysis, if we break above 20,400, then that's what I'd be looking for. So overall, hoping for a reversal towards at least 21.5 to 21.7. Repeated failure at 20,400 will be very bearish. I'd say a range break has yet to take place. So that's probably the most critical thing that we need to watch out for. And as I've been saying over the last few months, we've got MACD divergences present on the monthly time frame. It takes time to reverse, but it's still present down towards the number 12,000. A break of 18,000 and expect a move down towards 16,000 very quickly. So both scenarios are valid until we see a range break take place. So let's have a look at Ethereum now. And Ethereum is pretty boring at the moment. It's trapped inside this triangle pattern, and we're probably not going to get any movement until we see a break from 13,000 or 14,000. 1,400 to 1,300. So watch out for that. And the lower time frames are actually mimicking the larger time frames, because we can see here that there's a much larger triangle pattern, and basically Ethereum is bumping up towards there. So if we were to move above 1,427, then we would get back inside the triangle and maybe move towards the top of the triangle. But at the moment, it all really depends what's going to happen in this smaller triangle, whether we see that bump higher or whether we see another negative shock for Ethereum. Chances are the trend is bearish, so the chances are negative. But if Bitcoin's going to go higher, then that's quite debatable. But the bigger picture for me is still this head and shoulders pattern playing out. All the time we're really trading below 1,600 to 2,000. It still seems to me like this is a pattern that needs to emerge, because as I say, when we're in larger bear markets or bull markets, the lower time frames tend to mimic the higher time frame. So we can see this larger pattern, and this smaller pattern is starting to copy what's happening on there. So overall, longer term target is still 500, and I wouldn't be surprised to see Ethereum rolling over towards 800 if Bitcoin doesn't start to break out soon. So overall, Ethereum has headed back towards a former triangle breakout area, very important area around 1,390. So keep your eye on that. Watch out for a big rejection or a breakout around this zone. Return to the summer lows could be on the cards, but overall, the smaller triangle pattern is probably going to dictate what's going to happen over the next few days once we break out of that $100 range, which the triangle is trapped in.
And thank you. I hope you found my thoughts helpful. If you'd like more, please click the subscribe button for Pro BTC Trader and join me every week on Wednesdays for our live trading war room and daily email updates.